Tesla closed up today over 3%. And in this video, I'm going to go over why I entered December calls once again, $220 strike. We're going to go over what my entry requirement was, where I plan to take profit, and where I see Tesla headed in the next couple of weeks and next couple of months. Because if Tesla closes like this, on the weekly chart this Friday, we will have confirmed the bottom and we should see the breakout that we're expecting up to 260 and 300 within the next 2 to 3 months. For the position that I'm in, as I said before, the expiration is 12/20, which is December of this year. The strike is $220. I entered today at 14:43 p.m. with a quantity of 50. This is a $150,000 position. So far this year, I'm up 1.3 million after the losses that we've accumulated at the beginning of this month. And if we look at just my returns on Tesla for the year so far, my profits are $574,376. So the position size is big. It's $150,000. But what you have to understand is even if I lose that $150,000, which I don't plan to lose all of it because we're going to have stop loss requirements set, which I'm going to tell you in this video what they are. But if I were to lose the whole position, that wouldn't even be the profits that I've made just from Tesla alone. So when we talk about risk management, I'm not risking a ton. My golden rule is to risk no more than 5% of your capital max per options position with a fund exposure of 40% max, meaning that the most of your account that is out at one time across all positions is 40%. The reason for this is that if there's a big market drawdown like we saw last week across the market, if all of your options were to go to zero, you're only down 40%. That's still a lot, but it's going to save you from those catastrophic incidents that we see from time to time. If we look at a daily chart, we know that the three things that we're looking for on our checklist is to first predefine the trend. We know that the trend is bullish. The way we know this is if we zoom out to the weekly chart, we are trading over the BX trender. We were bearish for over a year, but since we got this switch back in June, we're now in a bullish trend. The second thing that we want to do is find out what type of mode we are in. The way that we do this is we look at most recent swing low, which is going to be down here at 170, and most recent swing high at $265. There are three types of modes when we're looking at charts. The first is going to be an impulse or an expansion, which is what we saw here. This is a massive breakout. The second thing is going to be a capitulation, which is going to be a massive sell-off. And the third mode is going to be what's called a compression or a consolidation, which is what we saw over here. With Tesla, we had a massive expansion followed by a very fast capitulation, and now the potential for another massive expansion. I was looking at puts and I actually had puts earlier on Tesla and I closed them out for a loss. The reason that I had puts is because we were pushing into 220. We saw that the market bias was going to potentially act as resistance, but instead we pushed through this level and continued to run. With the sheer amount of volume that we saw on Tesla today, followed by higher highs on the BX trender, which is the third thing we want, bullish accumulation, I think that there's a good chance that Tesla might pop right through this level and continue to push up to 240, 244, or $252. Now, if this level does not get broken and we see a rejection going into this week, what we will be looking for is first a price bounce off of 224 and a pullback. From there, we're going to see if we start to make lower highs on the BX trender, such as we saw back here on the 11th of July. We started to make lower highs. That was the sign that money was getting pulled out. But as of now, as long as we're pushing up into that range, we should see this continued breakout. Now, as far as my December calls are considered, if I end up seeing this reject and start to sell off, I'm going to close out my position and look to reaccumulate on a confirmed bottom within our institutional buy level. When we take our fib from swing lows to swing high, this golden pocket, the 0.618 to the 0.786, this is the institutional level where Wall Street and hedge funds start buying at. The most optimal level that we talk about here on the channel a lot is going to be our smart money level, which is the 0.786 to the optimal trade entry. If you guys want to learn all of this and all of our indicators, our courses are completely free. The link to all of them will be in the description. The market bias course is the specific one going over these indicators. If price pulls back down into these levels, I know that there's a very high chance it's going to get bought back up, and I will be buying heavy for the next 12 to 24 months. Now, my stop loss overall, like if we were to break this market bias level and break below 188 in the next 6 months, that is a sign that the trend will start to sell off once again and reverse as we did before. But I don't think that's going to happen. If we can close this Friday like this, with the BX trender making higher lows, I think that we're going to see Tesla push back up to 270 much faster and potentially even move our way back up to 300. Last time we saw this shift, Tesla ended up running about, from highs to low, from lows to high, about 50% in 98 days. So another 50% move in 98 days would be up to about $300, which is our target. If you guys want to learn how we trade, go ahead and check out all of our courses. They're completely free. And if you want to get access to all of my real-time alerts each and every single day and learn to trade our two-step strategy, you can join our private academy. The link is in the description. I'll see you guys next time.